Hey everyone, welcome back to Corporate Decoder, the place where we shine a spotlight on corporate secrets, and today we are diving into Adient's latest report, where numbers tell a story and we're here to read between the lines, prepare for some interesting insights into their financial performance. Before we dive in, if you love getting clear, no nonsense financial insights, hit that subscribe button and join our growing community on Discord, link in the description below. So, Adient, a major player in the automotive seating industry, has just dropped its financial results for the last fiscal year and the last quarter. They are telling us about their performance up to the end of September 2025. This is basically their report card for how they've been doing financially. What is really important here is to understand the actual financial performance. Companies often put out news releases to explain these numbers, and that is exactly what Adient has done here. They've given us a heads up on their financial health. Adient stock, traded under the ticker Adient on the New York Stock Exchange, is what investors watch closely. These are the ordinary shares that people buy and sell, and their performance directly reflects how the market perceives the company's health and future prospects. When companies file these reports, the heart of the matter is usually the results of their operations and their financial condition. This tells us if they are making money, how much they owe, and the overall state of their business. It's the nitty-gritty of how they are performing. Now, most importantly, let's look at the core numbers. While this specific document is an 8K, which is usually for significant events and references other documents for the full financial details, what we can glean is that Adient has announced their fourth quarter and fiscal year results. These are the numbers that actually show us how the company is doing. Think of it like this: you want to know how a student did on their report card, not just that they received one. The details are in the news release they referenced. Looking at this type of filing, we usually want to see what is happening with sales and profits. Are they selling more than before? Are their profits growing or shrinking? In the automotive world, things can be quite cyclical. Demand for cars fluctuates, and that directly impacts companies like Adient that supply parts for those cars, so we always look for trends. Is their revenue climbing, holding steady, or declining? And critically, is that translating into actual profit in their pocket after all their expenses are paid? For Adient, a company that makes car seats, their performance is tied to the global auto market. If car sales are booming, Adient should be doing well. If the auto industry is facing challenges like production slowdowns or shifts in consumer preferences, Adient will feel that too. You might see their revenue numbers go up or down, and this directly affects their bottom line, or what is left as profit after all costs. A 10% drop in revenue, for example, could mean they are selling 1 in 10 fewer car seat sets. That's a pretty direct impact. What we are looking for are the key financial indicators. Are they managing their costs effectively? Are they investing wisely in new technologies? Are they holding on to too much debt, or are they generating enough cash flow to operate smoothly and return value to shareholders? These are the questions that a deep dive into their financial statements, which are usually attached or referenced in these filings, would answer. Even though we are referencing a news release here, the core of what matters is the financial health and operational success it describes. Now, let's think about the bigger picture for Adient. They operate in a very competitive space. Companies like Lear Corporation and other global seating suppliers are constantly vying for contracts with major car manufacturers. Adient's strategy would likely involve innovation, cost efficiency, and strong relationships with automakers. Their success hinges on their ability to deliver high-quality cost. Effective seating solutions that meet the evolving demands of the automotive industry, like lighter materials and smart features in seats. Considering the global economic climate, supply chain issues, and the shift towards electric vehicles, Adient faces both challenges and opportunities. Electric vehicles, for instance, might have different seating requirements, or manufacturers might be looking for new suppliers with expertise in EV components. This filing, by referencing their financial results, gives us a snapshot of how well they are navigating these currents. It is a look at whether they are thriving or just surviving in a complex market. My assessment of Adient, based on reviewing their latest announcement, points towards a company in a critical industry that constantly demands adaptation. While these particular documents don't show us specific numbers from their financial tables directly, the fact they are reporting results for the fiscal year and quarter indicates they are actively managing and communicating their performance. The true strength or weakness lies within the details of those results, which we infer are provided in the accompanying news release. We need to see if revenue is growing consistently year over year, if profit margins are healthy and stable, and if they are effectively managing their debt obligations. If the numbers show revenue growth and increasing profitability, that is a strong positive sign indicating good strategic execution and market demand for their products. Conversely, declining revenues or shrinking profits would suggest underlying issues, perhaps related to competition, cost pressures. or shifts in the automotive market that they are not yet fully capitalizing on or mitigating. A key risk for any automotive supplier is the power of the car manufacturers. They can exert significant pressure on pricing and terms, which can squeeze supplier margins. Adient's ability to maintain strong pricing power and secure long-term contracts is crucial. An opportunity for them could lie in the increasing complexity of car interiors, with advanced technology, connectivity, and new materials becoming more important. Companies that can innovate and offer integrated solutions beyond just seats could gain a competitive edge. In conclusion, Adient's financial report signals it is navigating the dynamic automotive landscape. The core takeaway is whether they are demonstrating robust financial health and strategic agility to meet market demands and competitive pressures effectively. Investors and observers will be closely watching for sustained revenue growth, healthy profit margins, and prudent financial management. Alright? That is our breakdown of Adient's latest filing. What is your take on these developments and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.